In the beginning of the war, the perception was that NATO is strong and NATO can act, that NATO can deliver. And the only thing EU can do is to express different levels of concern in public statements.
I'm afraid the one that I am going to sound, I guess, rather apocalyptic about is food.
We would love this to be done in a consensual way with our friends and partners, ironing out the problems, stopping some of these barriers east-west. But to get that done, to have the insurance, we need to proceed with a legislative solution at the same time.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Overdoing a recession risk. Well, JP Morgan's Kalanovic says stock markets are overpricing the chances of a contraction. Global equities gain amid optimism in China. An apocalyptic warning. Well, the BOE Governor Andrew Bailey says a surge in food costs could hold dire consequences. This morning's job data shows a further drop in UK real wages. Plus, talking down Twitter. Well, Elon Musk floats a lower offer price for the network, and he continues sparring over spam bots on the social network. Now, quite a lot of stories that we need to get through, but first thing is first, so let's check on the markets. This is the picture overall for the European Stoxx 600. You can see they started on the day higher, some 0.7%. They're accelerating now that momentum, gaining 1.2%. Travel, basic resources. I'm looking at my board. You can do that if you have a Bloomberg on the go. So travel and basic resources leading a broad-based advance of the Stoxx Europe 600. Again, it sets the gauge to be on course for a third day of gains. This has really all to do with China and the fact that economic growth, surging price and policy tightening is still hurting, but there's a bit more hope that actually China will not go ahead with its zero COVID policy, and so we could see a bit of easing on some of the supply chains. Now, technology sold off in the last couple of days, now gaining 1.6%. The UK 10-year yield, now this is an interesting one after we heard, of course, from Governor Bailey, bond yields across Europe are jumping. This one, if you look at what's going on with the UK rate, jumping, surging some 10 basis points after data showed a decline in average earnings, and then Bitcoin over 30,000. Nothing to see here. Let's move it on. So let's look at the European map, and then I want to talk to you about Twitter. UK, you can see the FTSE 100 gaining 0.4%. The biggest gains really are the ones that were losing the most yesterday. So you have the FTSE MIB, the DAX and the CAC gaining over 1%. Also, Twitter shares falling 3.2% in U.S. pre-market trading. They're just opening. And it was about 40 minutes ago that Elon Musk started tweeting. He started saying that actually he may even pull away from the deal if the chief executive of Twitter does not prove that there's less than 5% of bots. But we were getting a nice briefing from Laura Wright, and she was saying, look, he always probably knew that the number was at above 5%. So we'll have plenty more on this never dull and never boring story. I love the Twitter story as this like public fight playing off on Twitter for the control of Twitter. I mean, the irony is not lost on anyone. Twitter down 2.1%. So recession chatter everywhere at the moment. We've heard from JP Morgan strategist Marko Kalanovic saying stock markets are overpricing the chances of a recession. Now, speaking at a summit in Miami, Elon Musk also claimed the U.S. economy is probably in a recession, which he said is likely to last up to 18 months. Now, it's been a subject on the mind of all of our guests here on Bloomberg TV.
We're seeing a lot of headwinds.
All of these really huge headwinds.
Notably lower growth, and we're going to see frustratingly high inflation.
To a very challenging growth inflation mix.
Stagflation, unfortunately, is the baseline.
Stagflation is toxic for traditional assets.
Is it a soft landing? Is it a recession? Is it stagflation?
It started out as an inflation scare.
Wall Street's biggest concern is inflation.
Then it became a growth scare as well.
There's a lot of conflicting signals.
Whether we get something worse depends on the soft landing debate for the Fed.
The Fed is effectively trying to thread a needle wearing oven mitts blindfolded.
It's a very small needle to thread.
It may end up hiking too much and pushing us into recession.
There's just generally so many headwinds.
Well, we're now joined to talk about the markets by Hannah Smith, the Vice President of State Street's ETF business. Hannah, great to have you on the program. So much going on to talk about. So thank you so much for joining us in the studio. So when you look at some of the concerns out there, what are the markets actually pricing in? Are they all inflation? Or is there also worry that we tip this world into a recession?
Yeah, I think when you look at the markets, there has been some signs of capitulation. What we're seeing is indiscriminate selling, or we did see that off the back of Wednesday's inflation numbers coming out of the US. And so we're seeing mixed signals at the moment. Investors are understandably cautious. If I look at the ETF flows that we saw last week, we saw heavy outflows across the board, 4.9 billion out in total. And the only inflows that we did see, interestingly, were in more defensive sectors.
So is it thematic that people are looking for? I mean, there's also this huge discrepancy when you look at equities or ETFs linked to equities and then everything else, bond market, but also FX.
Yeah, it's to be honest, there's not a clear picture right now. As I mentioned, there have been signs of capitulation. So we're seeing some of the equities which have stronger fundamentals selling off and some which are purely defensive. The UK, for an example, it doesn't necessarily have the strongest fundamentals, but we've seen it perform relatively well against other sectors. So it's a mix.
So, Hannah, given the mix and given, again, as you're saying, like all of these concerns and how things are moving quite fast, where do you see the best value going forward? Yeah,
I think what we've been telling investors is to look at relative value. Obviously, the markets have really taken a downturn this year. Also, look at commodities and commodity-related sectors, such as energy, which provides some inflation protection, and largely large cap. The US, for example, it has strong earnings. We're likely to see strong earnings resilience in this challenge market. So those are sort of the areas that we would advocate for.
So is it big US corporates also with still exposure to China? I don't know where China fits into all of this.
Yeah, China's an interesting one. Obviously, the numbers that we saw come out yesterday were very disappointing for the market. I think that it's interesting. If you can withstand the short-term volatility, then it could be an attractive entry point. It depends on investors and their risk appetite, and at the moment, there's risk aversion, so people aren't wanting to have that exposure.
When you look at the UK, so how different is it compared to Europe? I mean, Europe, because of the proximity, of course, to Russia and Ukraine, has a huge energy challenge, and that will mean that the job of the ECB will be that much harder.
Yeah, definitely. Obviously, the UK has its own challenges. It's going through Brexit. I think when we look at the UK from an investor perspective, it's very defensive. So we are seeing investors like UK for those reasons. It has high exposure to consumer staples, for example, healthcare. And these are all sectors which are performing relatively well, or we're seeing flows into as people are looking for quality.
And we'll talk about the UK in a second, but when you look at the, disbursement of some of the EU funds, are there any countries in Europe that look particularly attractive or less unattractive?
I think it's a difficult one. I think obviously the Russia-Ukraine war is a massive headwind when we're looking at Europe in general, and so I think there is value emerging, but Putin is really holding Europe hostage at the moment. So it's a very tricky area to enter.
Hannah, thank you so much. Hannah Smith there, Vice President of State Street's ETF business, stays with us, and we'll talk a lot more about the UK. Coming up is the Brexit deal in jeopardy, while as the UK raises the stakes in its standoff with the EU. We'll also get the latest on the Northern Ireland Protocol. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, pre-market, always a good idea to check out Twitter, especially when Mr. Elon Musk has gotten up early or hasn't gone to bed. I really don't know his schedule. And tweeted. He started tweeting about 20 minutes ago. Elon Musk saying he'll proceed with his $44 billion takeover of Twitter only and only if the social media giant can substantiate claims about the proportion of bots on his services. So he tweeted that unless Twitter provides proof of claims that less than 5% of its users are bots, he reiterated his own view that the ratio is far higher. Then he says the deal cannot move forward. So on the back of that, Twitter down some 2.9%. Again, was already falling yesterday on the back of some Elon Musk comments. The flip side is that Tesla, of course, he's a founder of Tesla, is on the up, gaining some 2.6% because there were concerns about how much debt he had to put in place or the financing to make that Twitter deal happen, and it would take away from Tesla. So there you go. Twitter, pre-market, down 2.4, Tesla up 2.6. Now, the UK government is set to set out its plans to unilaterally override the Northern Ireland Protocol, putting the Brexit deal agreed only 2 years ago in jeopardy, raising the risk of a trade war with Brussels. Now, it comes as the Bank of England governor also warns a surge in food costs could have an apocalyptic consequence for the global economy.
I'm afraid the one that I am going to sound, I guess, rather apocalyptic about is food. I have to tell you that, I think this is a big concern because I think two things that the Ukrainian finance minister said. One is Ukraine does have food in store, but it can't get it out at the moment. Two, while he was optimistic about crop planting, but he said at the moment, we have no way of shipping it out.
Well, now for more, we're joined by Bloomberg Opinion's Therese Raphael. So, Therese, there's a million things going on. First of all, you're going to see a huge cost of living crisis in the UK because of this high inflation. But then there's also this, added uncertainty with the Northern Ireland Protocol. Like, where are we?
Well, the Northern Ireland Protocol, so the very starting point here is that it's a trade barrier. So some of the goods that are transiting from Great Britain to Northern Ireland are getting checks. There are customs barriers, there are rules of origins checks, and all of that means costs. Now, in terms of the impact of the protocol on Northern Ireland's economy, some economists estimate that it's added about 6% of costs. Some say that it will bring Northern Ireland's economy about 2.5% below the level of growth it might have already had, which is less than the growth sacrifice that the UK's economy as a whole is projected to have. But the government is trying to thread a very small hole at the top of a needle here, if we could say. It has to balance the interests of the DUP, the Democratic Unionist Party, which is refusing to participate in power sharing in Stormont unless the protocol is overhauled. It sees this as an existential issue in terms of keeping the union together. It's to balance the interests of the EU, which doesn't want to rewrite the protocol, says this is what Boris Johnson signed, he has to live with it. It has to balance the interests of the White House, which is very worried about instability in Northern Ireland. It has to balance the interests of the cabinet, which is divided over it. And, let's throw in the Irish government as well, which is worried about access and the integrity of the single market.
Yeah, Andrea, so sterling at the moment is at 124.49. Why does the UK think they can renegotiate with the EU when the EU has said, no, this is what you've signed? Is it political capital because he was, such a support in trying to freeze out Russia in support of Ukraine?
Well, the cynical sort of answer is that, a fight with the EU is a nice distraction for a lot of domestic problems, from Partygate to cost of living to the apocalyptic food situation that Bailey referred to. I think a more nuanced answer is that the UK government, its ideological allies, I think, in Northern Ireland, the Unionists, do see a real problem with the protocol. They don't think it's working. They think it's a recipe for instability in Northern Ireland, and they think the EU can give a little more. And they've put together proposals, which we're going to hear in legislation, which reverses some of the burden of proof of showing that the goods that are transiting are in compliance with EU rules. It would enhance a trusted trader scheme. So the UK thinks it can get a little more. The DUP is not going to rejoin the Assembly until it gets more. And so Boris Johnson is trying, both with more conciliatory tones, but with the stick of unilateral legislation to try to thread that needle.
So we'll see if something happens to change it. Therese, thank you so much. Bloomberg Opinion's Therese Raphael there with the very latest on Brexit negotiations, really. Now, Hannah Smith, Vice President of State Street's ETF business, is still with us. Hannah, this seems like a nightmare just in terms of the Bank of England dealing with the economy. So we have Brexit, which could couple, I guess, certainly amplify some of the inflationary pressures that we've had. But the cost of living crisis is real, and it's worse than in other countries.
Yeah, no, absolutely. I think the UK, obviously, as Theresa mentioned, there are issues. There are issues there at the moment, and what we're actually seeing is the market isn't necessarily picking up on that. The flows that we've seen into the UK have been strong, and the performance has been strong as well. So I think it's, as I mentioned earlier, this flight to defensives that's kind of dominating the story.
So what happens in the UK? Like, how do you see? Is there a policy mistake coming from the Bank of England because they really need to choose between inflation and growth, or are we just? Is it almost a given that we'll see stagflation?
I think it's very difficult. The governors are obviously in a very difficult situation where they have to balance this inflation and what we're seeing is slow growth as well. So I think there's definitely going to be some reaction, whether that's going to be a recession, who knows? But I think there is going to be there is likely going to be an impact on the UK economy.
One thing that we've been trying to figure out is the UK almost a microcosm of what could go bad in the world, just because of this very tight labor market. It feels like all the concerns that we're talking about for the Fed, the ECB, kind of really come to the forefront here because it's a small, open economy.
Yeah, definitely. I think that when we look at the UK, like you mentioned, it does reflect some of the issues going on. A lot of the central banks have the same challenge at the moment. They're trying to tackle high inflation. At the same time, there's low growth, falling growth. So I think that it is essentially, what we see in the UK could well well be an indication for what we're going to see globally as well.
What kind of inflows are you looking at ETF in the UK? Are they different to elsewhere in the world?
The inflows have been relatively strong into the UK. So we've seen about 1.6 billion year to date into the UK. To put that into context, we've seen about 62 billion inflows into the European landscape. So that encompasses equities and commodities as well. But given the outflows that we've seen in some of the other regions and asset classes, it's still relatively strong.
And are you expecting that to change? I know the ETF world is such a fascination because it's a wonderful, wonderful way to play some of these things. And I guess it's growing almost every year.
Yeah, absolutely. I think the thing about ETFs is obviously there's so much liquidity within the ETF, so you often see the movements within the ETF before you see it within the wider market. So I think given some of the concerns that you've mentioned within the UK, I do wonder whether we will start to see a turn in that tide in terms of the inflows that we've seen and the strength.
Hannah, thank you so much. Hannah Smith, there, Vice President of State Street's ETF business. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine, and thank you. Shanghai is starting to unravel the punishing lockdown that's confined millions of people to their homes for more than 6 weeks. That's after the financial hub reported no new COVID infections in the broader community for a third consecutive day. The city reported 823 infections yesterday, down by more than 100 on Sunday's total. Now, Emmanuel Macron has named former Labour Minister Elisabeth Borne as France's new Prime Minister. The 61-year-old, once close to the Socialist Party, takes over from Jean Castex. Borne has also served as Transport Minister and Ecology Minister. The appointment comes less than 4 weeks ahead of key elections to France's Parliament. New York City is urging residents and visitors to wear masks indoors as COVID infections levels do rise again. The Mayor, Eric Adams, says the city is preparing to potentially enter a higher alert level in the coming days, but is not yet at the point of reintroducing a mask mandate. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, coming up, talking down Twitter, Elon Musk floats a lower offer price for the social network and continues sparring over spam bots on the social network. That story is up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Elon Musk has floated the idea of a lower price for Twitter while speaking at a conference in Miami. This adds to uncertainty surrounding the $44 billion deal. And then in the last hour, Musk said he'll proceed with his takeover of the social media giant only if it can substantiate claims about the proportion of bots on its services. Now, for more on all of this is Matt Blackson from Bloomberg Intelligence. Matt, you and I never bored because, I mean, he's a prolific tweeter. Yep. He's like doing business by tweet. I mean, it's absolutely incredible the amount of information. He's also talking about the SEC. So did he really believe that there were like less than 5% of bots on Twitter when he made the offer? Maybe
probably not. Who knows? But you know, I think there's a lot of things going on here. Clearly, the market's gone down a lot since he made that bid. Yeah. He's perhaps looking for reasons to either kind of renegotiate the deal or kind of step away from it without having to pay this $1 billion termination fee. Yeah. So difficult to know, as always, what's going on in his mind.
So has he had a change of hearts, or is it a downturn in technology stocks? Is it impossible to read?
Yeah, I think it's impossible to read. I mean, like I said, I think he's always had an issue about bots and fake accounts with Twitter. So I would imagine probably in his head he thought it was always more than 5%. I think he's now just kind of looking for a way to kind of really push them and negotiate a better deal, I think.
So what do you think happens next?
Good question. I think probably he's going to wait to see whether either publicly or privately Twitter provide more information about how they get to this 5% calculation. I would think they're better off doing that privately. And on that evidence, he'll decide whether to take forward the deal or not. I think it's very unlikely that's at the original $54.20 price. If he comes back with a revised offer, it's going to be substantially lower, I think.
I mean, privately, is there anything that's private? Like, I can't imagine the stress of dealing.
Yeah.
I've tried like to negotiate with Elon Musk, who has such a high-profile account and just tweets all the time.
Yeah, and as I was saying, before we came on live, I think if I was the CEO of Twitter, I'd just be keeping as quiet as I possibly could.
I mean, you could say that Elon Musk is 100% owning this, right? There's not much that the Twitter side can do.
No, not really. And I think that the more they talk publicly, perhaps the more they tie themselves up in knots. So keeping quiet, I think, would be the better option for me if I was Twitter.
Well, I'm hooked on the tweets. Matt Blackson, thank you so much. Matt Blackson there with the very latest on Twitter. Coming up, wheat prices keep climbing on worsening crops and Indian export curbs. We'll be joined by Bank of America's Kay Hope to discuss food inflation and the markets. This is Bloomberg. Overdoing recession risk, JP Morgan's Kalanovic says stock markets are overpricing the chances of a contraction. Global equities gain amid optimism in China. An apocalyptic warning. The BOE governor, Andrew Bailey, says a surge in food costs could hold dire consequences. This morning's jobs data shows a further drop in UK real wages. Plus, talking down Twitter, Elon Musk floats a lower offer price for the social network and continues sparring over spam bots on the social network. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So global food costs are poised to climb even further on soaring wheat prices after India curbed exports. Droughts, floods, and heat waves are threatening production worldwide, just as Russia's war in Ukraine throttles supply from one of the largest growers. Now, with lower-income countries being hit the hardest, Bank of America sees the impact reflected on emerging market sovereign spreads and inflation. Well, we're now joined by Kay Hope, credit research analyst at Bank of America. Kay, thank you so much for joining us. It does seem, when you look at wheat futures, now dropping actually by as much as 3.8% Chicago, it's probably an effect of just why they've been rising up so much. Like, where do we end up? How much are we looking at famine? Like, how much higher can these wheat prices go?
Wheat prices can go higher, and that's the expectation. It does take time for some of these moves to be reflected in actual markets. But the concern is that when you have 26 countries around the world who get more than 50% each of their wheat supplies from Russia and Ukraine, those countries are going to have to go somewhere else to meet that need, and that can continue to push things up.
So what does that mean in terms of, I mean, can we talk about supply chains, even if it comes to like food and agriculture? Are we going to be planting more of these crops, or how will it change the way we buy things?
There are some changes in what's being planted, and we are seeing some substitution already in grocery stores. Certain types of vegetable oil are being substituted for others, and that's something that we can continue to see. Ukrainian farmers are starting to report what they're planting this year, and some of them are planting more oils, seeing that need coming through. But what we're hearing from the Ukrainians is that they're planting about, at this point, they've planted about 80% of what they had planted last year. The sowing campaign is ongoing, and so at this point, they're only at 50% of the total that was planted last year. So that is ongoing, but Ukrainian farmers do face issues like fuel, equipment, and personnel to take them through the summer.
And transport, right, in and out of the country.
The transport links are major. So most agricultural products are transported through the ports that are now closed. Ukrainian officials are asking the EU and other countries to please make it easier for trucks to pass, for lorries to get through, and to look at rail. But these are all things that take a little bit of time.
Okay, talk to me, I mean, in your notes, and this is incredible, it is hard to believe that over 2 billion people face regular food security issues when we talk about driverless cars. And that really hit it home. When you write that and you hear that, is there anything that governments can do to try and alleviate some of this?
There are a lot of things that governments are working on, and the UN has a food and agriculture report they write every year that has some terrific recommendations in it. What's interesting to me is that a third of the food produced globally every year is wasted. And so one thing governments are working on doing is reducing that food waste. And in developing markets in particular, that waste happens at the start of the chain. So it happens at the point of production and moving that food to market. Where in developed markets like the UK, a lot of that waste occurs at the household level.
That's really interesting. So does that mean that there's something that big agricultural businesses can do to actually try and reduce that waste?
At the beginning of the chain, there are things that big agricultural companies can do simply by getting involved. Given that most global agriculture is small farms, that's a little bit more difficult than it might sound at the outset. But what we can do at the end of the chain in places like the UK in reducing waste at the consumer level, a lot of people are already talking about, using everything that you buy. Grocery stores that are now selling imperfect foods, things that are a little less than perfect. They're talking with the government about making that sort of a program a little bit broader, reducing some of those regulations that mean you can sell an apple that's a little too big or a carrot that's a little bit bent over.
So, Kate, talk to me about what this means actually for your space, which is the credit space. So does it change, the viability of credit space, for example, for big companies or also countries?
It's both. And we're seeing some of the food issues coming through in the emerging market spreads that you already mentioned. At the corporate credit level, we're already talking to, our credit analysts are talking to their companies about who relies on food inputs for their products. Beer companies who use barley and hops. Grocery stores, retail who are just starting to recover from the COVID pandemic. What's going to happen to those as people have to shift their spending patterns? Where will people look to spend or not spend? And what happens to margins as we go forward?
Is there any country also that, when it comes to sovereign credit, I'm thinking of Egypt, just because so much of the consumption there, for example, for some of the, the bread that's made, is in some of those countries. So does that have an immediate effect actually on sovereign credit
Egypt
rating?
and Tunisia are two of the big ones, absolutely. I believe there were headlines yesterday that Egypt has already concluded an agreement with India to try to find an exemption to some of the rules that India put in place earlier this week. And so I do expect us to see, we talk about COP26 and upcoming COP27, environmental issues meeting social issues. That's part of what this has to be.
Okay, this is a dumb question maybe, but I'm going to ask it anyway. Can you switch from like wheat flour to rice flour, or is that something that takes time because of tastes and also the supply chain?
For that particular example, I'm probably not your best expert, but there are examples of where things can be done. Corn flour, switching certain biofuels, going from biofuels to using that corn again to produce food. I think something like 40% of the corn produced in the U.S. is used for biofuels.
That's incredible, isn't it?
There are ways to find the food that's needed and get that to populations.
Kay, thank you so much for joining us. Kay Hope there, credit research analyst at Bank of America. Now, coming up, a key interview for you tomorrow, an exclusive conversation with Andrea Orcel, his first since becoming chief executive of UniCredit. So don't miss that front row, airing from 5 a.m. UK time Wednesday on the Bloomberg terminal and then on TV and online. But coming up, as the UK's cost of living squeeze intensifies, we'll be joined by Rishi Khosla, co-founder of the digital SME lender Oak North. We'll discuss how inflationary pressures are impacting the bank's UK business customer base. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Elon Musk says he will proceed with his $44 billion takeover of Twitter, only if the social media giant can prove claims about the number of bots on its service. The billionaire tweeted this deal cannot move forward unless Twitter provides proof of claims that less than 5% of its users are bots. His view is that that ratio is far higher. Now, Warren Buffett's Berkshire Hathaway has said goodbye to one long-time bank stake and made a big bet on another. A filing shows that Buffett ended his long-running investment in Wells Fargo in the first quarter. It was once Berkshire's biggest stock bet. According to the filing, Berkshire has now invested almost $3 billion in Citigroup. Microsoft is planning to nearly double its budget for employee salary increases as it seeks to retain staff in a hot labour market. The US software giant's pay hike will mainly affect early to mid-career employees. The CEO says the company's talent is now in high demand. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, Oak North, the digital-only challenger bank backed by SoftBank, specializes in providing business and property loans to SMEs. Since gaining its banking license back in 2015, Oak North has lent over £7 billion to SMEs across the UK. The bank's co-founder, Rishi Khosla, joins us, and he says he's eyeing a potential IPO and working to inspire the next generation of entrepreneurs. And Rishi joins us now. Thank you so much for joining us. I have a million questions on IPOs, but first of all, you really provide a real-world glimpse into what's happening in the UK economy. What are you seeing? Are people worried about the cost of living? Are they worried about inflation?
So the vantage point we have is very interesting. Obviously, supporting SMEs up and down the UK, we have, like you say, a front seat in terms of actually what's happening in sort of the high street as such. And when you look at that, you've already had situations where consumer confidence has peeled back and discretionary spend budgets have already started to be reined down in things like full-service restaurants, for example, in terms of leisure hotels. So you're seeing an impact there. But at the same time, you're seeing a stratification because, for example, London hotels are still doing extremely well. So the cost of living crisis, I think, is actually causing people to step back, actually run calculations on affordability and determine what purchasing behavior they want to go ahead with on the basis of that.
I was reading the story today, actually. There's 10,000 hotel rooms that have been added since the pandemic in London, and 50% of that was high-end. So what are the kind of struggles that the entrepreneurs that you speak to are facing? Is it finding the right talent, or is it paying them enough?
So right now, I mean, inflation on all sorts of input costs, including wage inflation, is off the charts, right? And for businesses, especially when you're playing to a discretionary spend pot, your price elasticity in terms of being able to increase your price to your customers isn't that strong. So you play that out. Absolutely, being able to pay them enough and actually hold on to talent, find the right talent and pay them up is a big challenge in terms of sort of margin compression and actually just being able to service well. Outside of that, I think, again, the strongest entrepreneurs always find opportunities in times like this. So we are seeing opportunities with entrepreneurs actually taking relatively bold steps to be able to actually gain further growth and sort of competitiveness in their businesses.
So what kind of questions do you get in terms of some of the loans that they need? Is there a step that's, in the funding process that they need more support than in other steps? Is there a pattern to this?
Yeah, I mean, look, for us, we established ourselves to help British companies scale up, right? Yep. So we term it's the missing middle. Yep. So these are businesses which are already evolved to a certain level, and they're looking to take their next stage up of growth. And that's...
Do they? I feel like the US is so much better at scaling up.
You know what? The US is better, and we're trying to make the UK better. So that's why, that's our whole mission. That's our whole reason for being. And beyond that, I mean, we try to do our bit as well to actually increase the appetite for entrepreneurship within the country as well, at a much younger level. So in a way, we're creating the future entrepreneurs to make sure that actually the UK becomes this massive innovation entrepreneurial economy, which arguably once was.
So what needs to change for that to happen? Is scale, I mean, scale feels like it's so important because if you're just starting out and you dominate the market, then people notice you, which is why Silicon Valley is so good at this.
I totally agree. Scale is so important. And like you just alluded to, the fact that many UK companies grow to a certain level and then exit and sell out and sort of, check out, it's sort of taking that to scale where you get that global recognition. That global recognition continues to attract the best talent to the UK. That attracts further investment dollars. That whole cycle sort of evolves. And clearly there's some areas like in the fintech space, in biotech, life sciences, where the UK has actually built that type of ecosystem, but I would still argue that growth element is still missing. The early stage startup element is very, very fertile in the UK.
Rishi, IPO, when is it happening? An exact date.
My answer is maybe it'll happen at some point in the future.
What, nothing more? Would you like more. That, or would it put too much pressure?
For us, my co-founder and myself, Joel, we're in this to build this business and really play to our mission, for a very long-term period. So actually an IPO for us isn't actually, an end goal as such.
Working from home, so we're asking this to every bank. What does it mean for your company? Is it working? You're digital only, so presumably it's working.
So look, we're digital only in terms of as a business, but ultimately we are big believers in the value of coming together, collaborating, innovating, and actually moving the ball forward. So at the moment, we've got a hybrid model to work, and I think that's where we'll end up sort of leveling, but actually bringing everyone together and being in offices is critically important, like your great offices here at Bloomberg.
Yeah, we're fully functional.
There you go.
When you look at some of the default levels, and again, we heard from the governor of the Bank of England yesterday saying, look, the rise in prices, especially inflation, food inflation, could be apocalyptic. What does it mean for some of the defaults and some of the loans? Have you modeled this?
Yeah, so we have a product called the Oak North Credit Intelligence Platform, which we actually license to other banks as well. But what we do within that is actually create forward-look views based on 273 subsectors across the economy. And by doing that, like we were modeling COVID in January 2020. Yeah. We've been modeling inflation, supply chain issues, energy prices, all of 21. So we're doing that. We're continually stress testing what that actually looks like across our loan book and therefore managing against that and actually critically helping our borrowers make sure they make the right decisions today to avoid them getting into issues tomorrow.
But is this a real problem, or is the cost of living? It's a massive
problem.
But so how many defaults could we see? I don't know if we talk about zombie companies, but we're just getting out of COVID.
Right.
And now we're seeing
if you just look at insolvencies in the UK, they've sprung up, right? Yeah. So if you look at defaults, across the banking sector, the probability is we're going to go into a real credit cycle.
All right, Rishi, thank you so much. Don't be a stranger. I want to know about the IPO,
thank you.
But also a lot more about UK entrepreneurship. Rishi Khosla there, a co-founder of Oak North. Now let's get back to one of our top stories. Ukraine calling on European leaders to approve candidacy status at the EU summit next month after Germany last week dampened hopes for a quick accession. Now the foreign minister, Dimitri Kuleba, who's in Brussels to meet his counterparts, spoke exclusively to our Maria Tadeo.
The point here is that in the last 2 months, we've been hearing from all across Europe, Ukraine, we admire you. Ukraine, you inspire us. Ukraine, you belong to our family. Now it's high time to make the next move and legal this political recognition in words into the legal and political recognition in facts.
Which is a membership of the European Union.
It's the candidacy status. It's the EU candidate status for Ukraine.
When do you want it?
To be granted at the EU summit in late June. This is the moment, this is the point.
We're talking weeks from now, essentially.
Yes, essentially, yes. But as I told you, we are on a very good track with the European Union. We are fighting the war, this is true, but we are also have the best relationship with the European Union ever, on all accounts. We are part of one. Ukraine, the post-war Ukraine, will make the European Union stronger.
You're a diplomat, so maybe this is not the most diplomatic question, but of course you make it clear you want to join the EU. It's your aspiration. When you look at right now a country like Hungary that is a member of the EU, don't you sometimes go, maybe that's unfair, that we're out and they're in?
Well, if I was eating popcorn in front of and watching the news, perhaps I could allow myself to think this way. But I believe that the current state of affairs in the European Union sends a very simple message. Nothing is set in stone. Every day you have to fight for freedom, for democracy, for peace, for respect for human rights, for prosperity. This is a daily fact. Once some countries who did not meet entry criteria at the moment they were allowed in became members of the European Union because there was a clear political will to make them members because they are one of us. All European integration is based on one question. Is he or she one of us? Mm-hmm. If the answer is positive, everything else is about technicalities.
The Ukrainian Foreign Minister Dmitry Kuleba there speaking exclusively to our Maria Tadeo. Coming up, it's been a tough quarter for hedge funds. In a moment, we'll dive into the findings of our analysis of the latest U.S. regulatory filings. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, let's check on UK assets because there's quite a lot going on with UK news. Now, we also have, I have to say, our Ven Ram, our cross-asset strategist, is writing on the markets blog. He is on fire. Go and check it out on M5. He's saying the pound is surging to the top of the leaderboard after those stellar job numbers out of the UK. He believes the gains look suspect, and gilts he also believes are too rich for comfort because of a tight labor market. That would keep the BOE going. It's all about the cost of living and, of course, the squeeze on UK living standards intensifying in March. You can see the FTSE gaining a touch, and when you look at sterling, it's 124.70. So it was also a dismal first quarter for the so-called Tiger Cubs, according to the latest U.S. hedge fund filings. Now, among the top losers was Tiger Global's management's flagship fund, which fell by, listen to this, 44%. Among the stocks that hedge funds sold down were pandemic favorites such as DoorDash, Netflix, and Zoom. Well, Bloomberg's Charlie Wells is here to dig into the filings. Charlie, just a piece of news. A lot of people will want to know this. Here in the UK, McDonald's is launching on Deliveroo in the UK. I know we're talking about DoorDash and all of that. I feel like a lot of people will be happy that McDonald's is on Deliveroo. So the question of the quarter, I mean, what's going on with tech?
Yeah, so tech is kind of coming out of that height of the pandemic era, right? So a lot of these companies that really thrived in those darkest days of lockdowns, Netflix down 70% or so, DoorDash, an American version of Deliveroo in some senses, which I don't know if it has McDonald's on it or not, that's down about 55%. And what you saw was a lot of these hedge funds, particularly these equity hedge funds, pull out of some of these favorites, Tiger Global in particular, liquidating its position in Netflix entirely.
How could they get it so wrong? And actually, what are they putting the money into?
Yeah, I think it's really difficult. I think, there are ebbs and flows in behavior as the pandemic ebbs and flows as well. It's really difficult to predict. We've seen some of the difficulty in companies like Carvana. So that's an American used car marketplace. We saw D1 Capital back out of there, but we saw Tiger put more in. We saw a Maverick also invest there. So it just shows the difficulty of finding winners. It almost seemed like in the equity markets over this past quarter, there's nowhere to go.
So does it reshape actually the markets? I mean, I know it's hedge funds, but actually changes everything.
Yes, so this is crucial for the hedge fund industry, And what we've seen really is these equity strategy funds struggle. And it's been a particularly striking turnaround because they were doing so well, right? Early in the pandemic, Tiger Global in 2020, it was up 50%. Look at the first quarter, down about 34%. So that is a striking change. You see, a little bit more success in other sorts of hedge funds, right? So macro funds like Bridgewater up about 16% in that first quarter. If you've got multi-strategy, they were up about 6% at D.E. Shaw. So what this really highlights is the importance of risk mitigation at these funds, because hedge funds, it's not all about getting the returns, right? Clients are also trying to pay for some of that risk mitigation, and they're asking.
And it's not working.
Yes, it's not working, particularly with these equity funds.
All right, Charlie, at least we can get, on Deliveroo, McDonald's.
Yes.
I don't have you down as a McDonald's kind of guy. Am I wrong?
I love chicken nuggets. I'm not going to lie about that.
Charlie, we find out something new about Charlie Wells every day. Thank you so much for joining us. The Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Kailey Leinz in New York, or Anna Edwards here in London, and this is Bloomberg.
We're generally seeing some actually very positive profit expectations from companies at the moment. But at the same time, they are clearly, very cognizant of what's going on in the wider economy.
Wall Street's biggest concern is inflation and interest rate hikes.
We're near a great shock. I don't know if we're going to unravel.
I think it's time to go back a little bit to neutral, but very important, it doesn't mean that we are now getting super optimistic, right? The environment is certainly a tough one.
This is Bloomberg Surveillance Early Edition with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Tuesday, May 17th. Our top stories today. Elon Musk puts up another roadblock to the Twitter acquisition. He says there's no deal unless the social media platform can prove that fewer than 5% of accounts are fake. Filings show how investment firms got hammered by the plunge in tech stocks. Tiger Global cut some of its biggest tech losers, but added others. Stanley Druckenmiller cuts his losses by dumping Google and Carvana. And Turkey's President Erdogan puts the brakes on Nordic expansion. He won't allow Sweden and Finland to join the alliance, he says, because of their stance on Kurdish militants. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And Kailey, really strong gains across European equity markets today, perhaps lacking any really evident driver. Say it quietly, but are we buying dips once again?
Yeah, and clearly the gains in Europe followed the gains we saw in Asia, Anna. Actually, the MSCI Asia Pacific Index was higher for a third day in a row. That's the longest winning streak going all the way back to mid-March. We haven't really seen gains in succession recently in the Asian markets. The MSCI Asia Pacific Index up about 1.5% overnight, and that was really a move led by Chinese technology stocks. The Hang Seng Tech Index rising the better part of 6% after you had regulators in China meeting with some of the biggest tech companies out there. That is feeding into the narrative that perhaps the worst of the tech crackdown is over and giving a lift to those stocks. The other thing giving a lift to sentiment in Asia is the COVID news out of China. You had 3 consecutive days of zero community transmission of COVID-19 in Shanghai. That is a milestone which may allow authorities to start easing the lockdown there. So that's giving a nice boost to the Chinese yuan, one of the strongest Asian currencies against the dollar today, up about 0.6%. We're trading around 6.75 or so. And then I would just point out that you're seeing selling pressure really globally in the bond market, and that was definitely evident in New Zealand, where the 10-year yield rose about 6.5 basis points, trading right around 3.64%, Matt.
All right, very interesting stuff. It's really feeling like a risk on day, which is fascinating because we have recession forecasts that are all over the shop. Marko Kolanovic at JP Morgan says markets are showing a 70% chance of a recession. Meanwhile, UBS says markets are showing a 40% chance of recession. There's a wide disparity between those two numbers, and Bloomberg's survey of economists says 30%. S&P futures, nonetheless, up 1.5% right now. So very bullish here, especially considering what's happening in Europe and what happened over the last couple of sessions here. U.S. 10-year yield rising a little bit. Investors letting go of some of that debt, letting go of the perceived safety of government bonds. And so we see 2.91, 2.92%. NYMEX crude little changed, but at a really high level, 114.65. And we still see a really tight spread between NYMEX, between Texas Intermediate crude and Brent. And then Bitcoin gaining a little bit, but also not very much of a move, right? At 30,565, hovering around that level it's been since the end of last week. So we hadn't really seen a huge dip buying show in cryptocurrencies, but of course we've had bigger problems in the crypto space because of the unwind of Terra USD. Anna, what do you see in terms of European gains?
Yeah, interesting to see what Bitcoin's doing there then, Matt, given we saw another algorithmic crypto getting into trouble over the last 48 hours or so. This is the European picture, though, putting those concerns to one side. We are buying stocks with some kind of enthusiasm today, up by more than 3% in the French market and in the German market, and it is pretty widespread. The first hour of trade, we had all sectors in positive territory. We just got some GDP data out for the first quarter. Euro area GDP growing by 0.3% in the first quarter. That's just above the initial estimate, which was 0.2% growth. So that does look, at the margin to be a slightly more positive story around the first quarter. Of course, a lot has changed since the first quarter because of war in Ukraine, and that is obviously going to have an impact on the Eurozone. Just checking whether we got any reaction. We didn't really on the euro as a result of that data. The euro was already stronger, and the dollar is weaker this morning, in keeping really with that risk on tone we're seeing in other assets. The pound also much stronger today, 124.78, up by 1.3%. We've had some labour data out on the UK economy earlier on this morning, and it was really strong. The labour market continuing to tighten, the unemployment rate coming down, wages going higher. They are going higher, and bonuses are spreading, not just financial services, but elsewhere in the UK economy. Bonuses are being paid out. But if you look at things and adjust them for inflation, that big ramp up in wages and bonuses not actually compensating for inflation fully and entirely. More on inflation as we go through the week here in the UK. But the market's adjusting to more interest rate hikes from the Bank of England. We see that in gilt markets as well. Daimler Trucks up by 5.3%, guiding higher for this business, and also talking about the second half of the year and saying that they expect a really material improvement in the chip shortage situation in the second half. And Contour Global, this is quite a small player in the energy markets, but interesting because the private equity firm KKR has made a bid for this company, saying they're buying this business, and KKR, Kailey, has been buying up, snapping up all kinds of energy assets across Europe.
Yeah, big move for that stock. And we could see some big moves for stocks when we get retail earnings later ahead today. That is part of what is on this Tuesday agenda, kicking it off in the U.S. with Walmart and Home Depot, which both report before the bell. That will be followed by U.S. retail sales at 8:30 a.m. New York time. Then at 2 p.m. Eastern, Fed Chair Jerome Powell will be speaking at the Wall Street Journal's Future of Everything conference. We'll also hear from Charles Evans, Loretta Mester, Patrick Harker, and Jim Bullard all throughout the day. So a lot of Fed speak on the docket. And finally, congressional primaries are also being held in Idaho, Kentucky, North Carolina, Oregon, and Pennsylvania as the midterms draw ever closer, Matt.
All right, so politics really kicking in. Meanwhile, Elon Musk says he'll proceed with his $44 billion takeover of Twitter only if the company can substantiate its claims about the proportion of bots on the service. Bloomberg's Danny Berger has the latest on what look like negotiations. Danny?
Yeah, I guess this is what, day 5 of Elon Musk's hold on the Twitter deal, which isn't really a thing when it comes to merger agreements. But I don't know when this guy sleeps. Just about an hour ago, he repeated this claim that he made yesterday, saying that he thinks 20% of the users on their actually fake or spam accounts, just tried to put those two words together, saying that that's 4 times what Twitter claims. Spam accounts could be much higher. My offer was based on Twitter's SEC filing being accurate. Yesterday, Twitter CEO publicly refused to show proof of less than 5%. This deal cannot move forward until he does. This kind of referring to a weird little Twitter spat that the two got into. Look, a lot of strange things happening here, but the facts are this. Twitter, for 8 years, has said that their figure of those spam accounts are less than 5%, and has always qualified that, saying that it could be higher, that could not be the actual number. 3 weeks ago, Elon Musk signed a contractual obligation to buy Twitter, I guess not having vetted those numbers before. That's the kind of due diligence you do before signing, again, this legal commitment. Now, we look at what Twitter has done. It's down again pre-market more than 1.5%. It's about 30% off of Musk's offering price. So maybe there's some buyer's remorse. Maybe he's trying to strong-arm Twitter into a lower share price. But again, worth noting, he signed a contract agreeing to buy Twitter at $54.20.
Yeah, absolutely. So he's keeping us on our toes here in the European time zone. We need to pay attention to when he's tweeting, of course. Let's talk more broadly then, Danny, about tech, because we heard a lot about tech holdings from hedge funds and their disclosures around their 13Fs.
Yeah, so this is always a bit of a look backwards because these are filings that capture the first quarter, but it was really interesting to see what happened with tech. As an aggregate, hedge funds did dump some of their tech exposure, but it shows even if you rejiggered some of your tech exposure, it was still a really, really hard month, and indeed even a year to be a long-short equity fund manager where you previously had relied on tech. Tiger Global, I think, encapsulates that really well. They did exit Netflix. They released some of their DoorDash holdings, which would have been a good bet. However, they added things to like Caravana and Dave Inc., both tech companies in one way or another having their own issues but falling a lot. So again, it's been a year so far that unless you were a macro hedge fund manager where you could go long oil, you could short bonds, if you're a long-short equity hedge fund manager, you would have lost about 4.5% over the past year. It's really those discretionary macro hedge funds. Those are up more than 5% over the past year, which have been able to succeed in this environment, Kailey.
All right, Bloomberg's Danny Berger, thank you so much. And of course, that macro environment as of recently has been defined by geopolitics. So let's get to that now. The planned addition of Sweden and Finland to NATO has encountered some complications. Turkey's President Recep Tayyip Erdogan says he won't allow the Nordic nations to join the alliance due to their stances on Kurdish militants. He spoke yesterday.
Neither country, Sweden or Finland, has an open, clear stance against terrorist organizations. Besides, throughout this process, even if they say they are against terrorist organizations, on the contrary, they have statements saying they will not extradite certain terrorists.
Rosalind Matheson, Bloomberg International Government Editor, joins us now for more. Roz, you still have a number of European ministers coming out sounding optimistic that Turkey is eventually going to get in line and allow this expansion to happen. What is the likelihood you place around that?
Well, the question is, what is the Turkish president wanting in all of this, in saying these things that he doesn't support their joining NATO? Does he mean he definitely doesn't support them joining NATO, or he would only support them with certain conditions being met? It seems at the moment to be the latter. So the question then is, what does he want in return for supporting their membership of NATO? And it seems to be a variety of things, but primarily he wants Sweden, the main country that has endorsed Kurdish movements in the past, to really condemn the terrorist interest that Erdogan says is there in the Kurdish movement, which is the YPG. He says they operate in Turkey and that Sweden is giving them too much support. So he seems to want an overt condemnation there. And he also probably wants some other things too while we're at it, given he's in a strong negotiating position. And that could mean, does he want to have extra military equipment supplied by the US, for example? But really, it's to be seen what he rolls out as his shopping list to get this done.
Roz, also on the agenda when it comes to global and certainly European geopolitics is what the Commission says is okay to do in terms of securing energy at this point. Paying for Russian gas, for example. There's been a lack of clarity as to which currency it was okay to use to pay for it. What have we heard about that?
Well, that's right. From the outset, some countries said it's very confusing. We don't know if we're going to fall afoul of potential sanctions if we do this. We're getting no clarity on guidance. Now we've got the Commission saying essentially, actually, it's all right. You'll be able to pay Gazprom for gas and not fall afoul of sanctions anyway after weeks of sort of torturing themselves with the negotiations on it. So it's essentially giving countries and companies some breathing space on gas. They will continue to be able to have Russia's supply for the foreseeable future as a result. The question is, does that change the timeline for countries to move away from Russian gas? Of course, they need to diversify in the longer term their resources. So it's interesting to see how that end might play out.
All right, Roz, thanks very much. Rosalind Matheson joining us there, our head of international government. Now, the U.S. Senate has overwhelmingly voted to move toward passage of more than $40 billion in aid to Ukraine. Monday's procedural vote sets up Senate passage of the legislation as soon as tomorrow. Emily Wilkins, Bloomberg government reporter, joins us from D.C. for more. So this has bipartisan support.
It does, Matt. And we knew that it had bipartisan support. It's just the thing with the Senate is that if you don't get all 100 senators to agree on something, it just has to move a little bit slower, as we saw with Senator Rand Paul holding up the funding over concerns about who would be managing the funding. We've also heard other similar concerns from fiscal conservatives like Paul, who have said, we're worried about how much money we are giving to Ukraine, what kind of oversight there is. But we are seeing with polling, Mammoth Polling released one the other day, really showing that there is still strong bipartisan support in the American public for continuing to aid and assist Ukraine. And you do see that with this vote yesterday to really move forward in the process. And we can see final passage either tomorrow or Thursday. And as long as that bill text does not change, it goes directly to President Biden's desk where he can sign it into law.
Well, of course, Emily, another issue at play has been related to funding around the COVID-19 pandemic. And yesterday, the U.S. government announced it would extend the COVID-19 public health emergency past mid-July. What is the significance of that?
So what this really enables, it helps and assists a number of individuals as well as companies with really addressing the needs of the pandemic. Think vaccines, think people getting on Medicare, Medicaid, making sure that they have their health needs addressed during this time. It's a bit of a process, it's a bit of manufacturing, it's a bit of a behind the scenes. And this really comes at a time where most Americans, they're taking off their masks, they're returning to life as normal. But we are beginning to see some potential spikes in the number of COVID cases in New York. The other day, we did see some concerns that the city is potentially reaching a rate where masks might again be required indoors. We're also seeing similar rises in the D.C. area.
Yeah, we're all waiting to see if that alert level here in New York City is raised to high and we have to put the mask back on. Thank you so much to Emily Wilkins of Bloomberg Government down in Washington for us. Now let's get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. Of course, Danny was running us through some of the hedge fund related revealings of 13F filings and especially related to tech. But we also got some insight into what Warren Buffett's Berkshire Hathaway was doing in the first quarter. And that includes a $2.6 billion bet on Paramount Global and a $2.9 billion bet on Citigroup. You're seeing that show up on shares of both companies this morning. Paramount up about 8.5%, Citi up the better part of 5%. Another stock tied to Berkshire Hathaway in some sense because it is backed by it is Nubank, which is a Brazilian digital bank. It reported after the bell yesterday a surprise profit, so that eases some concerns around the stock, which has fallen 53% year to date. It's gaining a lot of that back though this morning, up about 10.5%. Finally, Matt noted this earlier, but you are seeing some lift in Bitcoin. We still are around that 30,000 level, but nonetheless, the fact that the direction is upward this morning is giving a lift to some crypto-related equities, including Coinbase, up 7.25% in early hours this morning. But Anna, this is a stock that has moved by at least 9% in each of the last 8 trading sessions. It really goes to show you how volatile it has been in the cryptocurrency space, Anna.
Yeah, Bitcoin up 2%, as Matt was pointing out for us a little earlier. Let's get to some breaking news then, Kailey. Janet Yellen, Treasury Secretary, is speaking at an event in Brussels. Some headlines coming through from her address there. She's calling for more aid for Ukraine, more money for rebuilding of Ukraine as well. And then also talking about the subject of China, urging the US and the EU to cooperate more on China. When we come back, we will get into a conversation with Andrew Sheets, Morgan Stanley Chief Cross-Asset Strategist. The market quickly repricing more Bank of England rate hikes into the markets this morning. We will ask about the global interest rate hiking cycle next. This is Bloomberg.
Welcome to Bloomberg Surveillance Early Edition. We are simulcast on Bloomberg Radio and on Bloomberg Television. I'm Matt Miller here in New York with Kailey Leinz, Anna Edwards with us out of London. Now, I started getting nervous last weekend when I heard Lloyd Blankfein say that consumers need to prepare for a recession. I'm not prepared at all, and it doesn't look like other Americans are either. Anna shared this chart with me, which if you're listening on radio, I'll walk you through it. Shows personal savings as a percentage of disposable income. And remember, during the COVID-caused recession, these personal savings rates shot higher. Everybody was stockpiling toilet paper and money, but now we're back below pre-COVID levels. Americans only have 6.2% personal savings, 6.2% of their disposable income. Lynn Thomason joins us now, Bloomberg Markets editor out of London, to talk about all these recession calls that we're hearing from Lloyd Blankfein over the weekend. Now UBS says markets are predicting a 40% chance of contraction, and JP Morgan's Marko Kolanovic says markets are showing a 70% chance of recession. Are these fears starting to peak?
Absolutely. I mean, it's amazing that, just a few months ago, you really didn't have these kind of calls. And it's incredible how quickly things have changed from, this was sort of out of question a few months ago. But now everyone is talking about the risk of recession, stagflation, and how do you invest in an environment like that?
And Lynn, a lot of focus on inflation of all sorts, and including food price inflation. Here in the UK, we heard some quite alarming language from the Governor of the Bank of England yesterday, talking about food price inflation in a global context, but clearly the UK will experience some of that, and wheat prices clearly at the front of this.
Absolutely. I mean, anytime a central banker uses the word apocalyptic, I think people are going to get nervous. And in my sense, that is such a big part of inflation. It's going to hit everyday consumers, and it's not something that central banks can really wrestle with. It's all due to supply disruptions, the war in Ukraine. Raising interest rates won't get us more wheat and corn.
Yeah. Thanks very much, Lynn. Bloomberg's Lynn Thomason with the latest on the markets. And for further market analysis, you can get the Thinking of the Markets Live team. MLIV Go is the function to use on your terminal for the Markets Live blog. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. Now, keeping you up to date with news from around the world, here's the first word. The accused shooter in the Buffalo massacre has discussed his plans for shooting for months on the popular chat app Discord. That's according to logs of his post reviewed by Bloomberg. In December alone, the suspect referenced his plans to commit the attack at least 17 times. Discord says it's cooperating with law enforcement. Abbott Laboratories reached a pact with U.S. authorities that will allow it to begin making baby formula again at a troubled plant in Michigan. That could help ease a shortfall that has rattled many parents. The plant has been shut since February. Meanwhile, the owner of Gerber's baby food, Nestle, is air freighting formula to the U.S. Shipments are coming from the Netherlands and Switzerland. Shanghai is slowly emerging from a punishing lockdown that confined millions of people to their homes for weeks. The city reported a third consecutive day of no new COVID cases in the broader community. Authorities say that will allow them to unwind the restrictions that curtailed almost every aspect of daily life. And the UK will make a direct challenge to the European Union today, laying out a plan to amend its post-Brexit trade deal. Foreign Secretary Liz Truss will tell lawmakers that if negotiations with the EU fail to make headway, the government will introduce laws that would override parts of the Northern Ireland Protocol. The EU insists that the UK must honor the agreement it signed. And Anna, after all this time, Brexit is still not really over, is it? Yeah, Brexit, that story that keeps on giving. Certainly more to cover on that subject. We'll get more details a little bit later on in the programme. But yeah, no quick end to that particular standoff over the Northern Ireland Protocol. More details coming up. Andrew Sheets joins us, Morgan Stanley Chief Cross-Asset Strategist. He'll be with us shortly to discuss the prospect of a recession, perhaps. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. Elon Musk puts up another roadblock to the Twitter acquisition. He says there's no deal unless the social media platform can prove that fewer than 5% of accounts are fake. Musk says he believes the number is a lot higher. Filings show how investment firms got hammered by the plunge in tech stocks. Tiger Global cut some of its biggest tech losers, but added others. Stanley Druckenmiller cuts his losses by dumping Google and Carvana. And Turkey's President Erdogan puts the brakes on Nordic expansion of NATO. He won't allow Sweden and Finland to join the alliance because of their stance on Kurdish militants. Erdogan called Sweden a nesting ground for terrorists. Still, we were hearing from our colleagues earlier on that perhaps that doesn't stop the expansion. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. That's the geopolitics, a lot to discuss there then, Matt. But on the markets, the big question around just how far these markets fall, even though today is quite a risk-on session.
Yeah, it hasn't been bad for the last few sessions here in the U.S., but we're looking at another day of gains in terms of S&P futures, up more than 1.5% right now, and investors are letting go of bonds. The yield floating up now to 2.91%, just about there. So investors are betting maybe that we've fallen far enough. You've got bullish analysts out today like Marko Kolanovic at JP Morgan saying the pricing in of a recession is far too high. He says the S&P shows a 70% chance of a recession. Somehow UBS says only a 40% chance of a contraction is being illustrated by the markets. So varying views there. In any case, crude not doing much, but at a relatively high level, almost $115 a barrel for Texas Intermediate. And the spread to Brent is very tight right now. Also, Bitcoin not doing very much. Yes, this says it's up 2.6%, but we're only measuring it from midnight, which was like 5.5 hours ago. And let's be honest, it's just been floating around $30,000, a little bit more, a little bit less for the last few sessions. So we're not seeing a lot of move in what is traditionally a very volatile asset. Kailey, what are you seeing in terms of pre-market movers?
Well, of course, what continues to captivate all of us is just the saga regarding Twitter and its would-be new owner, Elon Musk, except does he really want to come to own the company? That is very much in question, as he says that acquisition, that $44 billion deal, will not go through unless Twitter can prove that less than 5% of its users are bots or spam accounts. And the Twitter CEO saying that it's really difficult to do that. So it's a wonder. I wonder if Elon Musk is really just trying to get the price down, as he says a deal for a lower price tag wouldn't be out of the question. And indeed, the price is down this morning by the better part of 3%, trading at $36.29 a share. So far below that $54.20 asking price. Meanwhile, Tesla, Elon Musk's other baby, is up nearly 4% in early hours. It's interesting to see how those two have been trading opposite of each other. And of course, we continue to watch the fallout of the 13F filings we got out yesterday, what hedge funds and the likes of Warren Buffett's Berkshire Hathaway were doing with their money in the first quarter. For Berkshire Hathaway, that included a $2.6 billion bet on Paramount Global, and that stock is up 8.5% as a result of that revelation. You also had Carvana in the news. On the one hand, Stanley Druckenmiller was pouring out of it, as Anna mentioned, but you also had Tiger Global, Chase Coleman's fund, buying up more of it. Of course, that has been a painful trade, considering this stock is down more than 80% since its peak last August, but it's up about 5% before the bell this morning, Anna.
European equity markets then, Kailey, certainly setting a fairly bullish tone, picking up on some of that from Asia and passing that through into the US then as well. The European stock market's up by 1.7% this hour. A lot of focus on UK assets this morning. We had that labour market data, which was tight, wages rising, but not quite to the extent that would take account of inflation, because inflation levels are, of course, high. But because the labour market does look quite so tight, this has the market thinking that the Bank of England will be able to do more hiking than they previously thought. So factoring in further hikes from the BOE into the pound. We see it here up by 1.2%, but also into gilt markets. So that's something to keep an eye on and something we'll discuss with our guests shortly. This is Daimler Trucks, and this one is up by 6.9% this morning. They're guiding a little bit higher, but also talking quite positively about the second half of the year and the extent to which they think they'll see substantial improvements in the chip shortages that have really been an issue for that industry. And Contour Global is an energy business. It's quite a small one, Matt, but it is going to be bought up by KKR, and KKR, the private equity business, has been buying up all kinds of smaller energy assets across Europe.
All right, we'll be watching very closely that chip shortage. Mercedes-Benz, by the way, has an investor day on Thursday in Nice. I might be there. I'm looking at the recession odds here, as I've been saying throughout the program, all over the map. In fact, Bloomberg surveyed 37 economists, and their chances of a recession, their probability was just about 30% right now. But JP Morgan's Marko Kolanovic says the S&P 500 is showing a 70% chance of a recession. So where is it really? Let's bring in Andrew Sheets, Morgan Stanley Chief Cross-Asset Strategist, to talk about really, I guess the interesting part isn't where you put the probability, though I do want to know, Andrew, but the fact that the market has shifted its concerns from inflation to growth.
Yeah, thanks, Matt, and good morning. I think that's exactly the right way to think about it. I think we've had a year dominated so far by fears around inflation and the central bank response to inflation. And I think what we're shifting to now is a market that is going to be dominated and is being dominated by the growth impact of that central bank shift. So, we do think that the growth outlook for the global economy over the next 12 months remains challenged. A recession is not our base case, but I think it's very safe to say that the odds of a recession are above average. And, we think for some markets that's in the price. We think, say, U.S. 10-year yields are fairly priced. We think for that higher risk of a recession, we don't think that's in the price of the S&P 500, which is why we're targeting a lower price, 3,900, 12 months out.
Well, Andrew, if you look at the Bank of America Fund Manager Survey for the month of May, which just came out this morning, stagflation fears at the highest since August 2008, and cash levels among investors at the highest since September of 2001. In the kind of environment you're describing, how much cash do you want to have on hand?
Yeah, thanks, Kailey. So I think that's right. I think this is, in some ways, a classic bear market where conditions are challenging and people are aware of how challenging they are. It's not a secret. And I think that cautiousness, which shows up in that survey, is very evident in the investor conversations that we're having. So, we had been running an overweight in cash in our investment allocation from October of last year through April of this year. We closed that and moved that money back into U.S. government bonds. We closed an underweight in U.S. government bonds. And, I think that while the case for cash had been to be overweight cash had been stronger, I think it's now more balanced. I think U.S. bonds are now at a level where they can provide more diversification. And I think you also do have a case where, again, you've had other assets that have adjusted in risk premium and look fair to cash. So, we'd be normalizing that cash overweight here. I think that makes sense. Yes, there are a lot of uncertainties, but I think the advantageous nature of cash relative to other assets looks more balanced.
You talked there about what you're doing with treasuries, Andrew, and I thought I'd pick up on that then. A lot of people talk about how the market was really short treasuries, and some of that maybe has been unwound as the market becomes more concerned around growth. Is that for you what is the short covering of treasuries? Is that what's keeping a lid on yields at this point?
Yeah, thanks, Anna. So I think it's a couple of factors. I think its growth is slowing, and it's slowing. We think it will continue to slow on Morgan Stanley's forecasts. I think a lot has been priced into the Fed. Recently we were pricing in effectively a 94 style hiking cycle already into the futures market, which it might happen, but that would be a very aggressive pace of Fed tightening. And then you've seen a lot of other tightening of financial conditions. The dollar is very strong. Oil prices are high. So all of that could do some of the work that the Fed would otherwise have to do. And I think we're also at a level now where yields could go higher, but if growth really slows, they could also go lower and provide some of that more traditional ballast. And I think another kind of derivative of that view is that we think rate volatility can come down a bit here, which should be very helpful for the mortgage-backed security market, for the agency MBS market. very big segment of U.S. fixed income. It's a market that we've moved overweight, and we do think that's an area of high quality fixed income investors are being paid well.
So, Andrew, talking there about how much the Fed will be left to do after the markets have done their thing, where does that leave the Bank of England? A lot of focus on the Bank of England this week because there's a lot of data coming out on the UK. Today we had labour market, tomorrow CPI, and the market seems to be pricing in more rate hikes this morning than they were just yesterday because of the strength of the labour market. What did you make of that narrative?
Yeah, so we have a different view at Morgan Stanley. We think the Bank of England is ultimately going to do less on the hiking side because the economy will ultimately be weaker. So, today's data doesn't fit that narrative as maybe well as we would have liked, but it's just one data point. And we do think UK consumers are still being hit with a very significant cost of living increase. You still have some major uncertainties around trade and the evolution of Brexit. And you still have, some energy uncertainty. So we think all of that will ultimately drive a weaker consumer backdrop in the UK, which will ultimately mean the Bank of England does not hike as much as the market currently expects.
Andrew, thanks so much for your time. Good to speak to you. Andrew Sheets, Morgan Stanley Chief Cross-Asset Strategist. Coming up on retail earnings and on sales, Stacey Widlitz joins us, SW Retail Advisors President. We'll talk about the strength or otherwise of the US consumer. This is Bloomberg. This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, Marathon Asset Management CEO Bruce Richards. That's at 10:30 a.m. in New York, 3:30 p.m. in London. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. Well, it is a busy week for U.S. retail. First, we get economic data with retail sales today at 8:30 a.m. Wall Street time, which is expected to show a gain of 1% in April. Meanwhile, Walmart and Home Depot will also kick off retail earnings before the bell this morning. Joining us now is Stacey Widlitz, president of SW Retail Advisors. So, Stacey, the key theme across both the economic data and the earnings is going to be the extent to which higher prices have hit demand and dampened discretionary spending. What do you expect to see?
Well, it's interesting. We're hearing, there's a ton of fear out there, first of all, but we're hearing from companies, most recently Tapestry, saying, we've pushed through price increases and the consumer is so far okay with it. But if you think about Walmart here, in the past quarter, their ticket and their traffic was kind of equal in terms of the comp. So now we're moving into a situation where perhaps units come down, traffic comes down, and the comp is all ticket increase or inflation. We all know the consumer is under severe pressure with inflation, and there's going to be a trade down effect. And for the likes of Walmart, they will be a beneficiary, which is largely the reason the stock has held up and is still in the green this year versus a 30% decline for the S&P retail index.
So if consumers are driven to Walmart because of lower prices, though, Stacey, doesn't that inherently mean that there is a limit, a cap to which Walmart is actually able to exercise pricing power? How does that impact their margins?
So for Walmart, over the past couple of years, the spread between Walmart and the grocery stores, for example, has increased. So the value is definitely there. And of course, if they increase prices, it will be less than the competition because obviously if Walmart goes out to its vendors, which it has done in the past, which we've heard a lot about, and kind of says to them, listen, we need you to give back and squeeze them, they have to. It's Walmart. So that's how they protect their margin. They're also doing better in apparel, health and wellness. So, they're increasing their share in categories across the board.
Stacy, Anna turned me on to a pretty fascinating chart this morning, which I've already showed our viewers. It's the U.S. savings rates. And of course, they shot up during the pandemic, mainly, I guess, because we were all stuck inside and weren't able to go out and spend. It looks like we figured out a way. This chart shows household disposable income, less household consumption, and we're back down to pre-pandemic savings rates, only 6.2%. Are you concerned about this because the consumer is so important, or is the household consumption of that equation just getting bigger and bigger?
It is a huge concern, and that's an amazing chart there because it gives you the snapshot of what happened during COVID. We all kind of stockpiled cash, and that's why particularly luxury did so well. Nobody had anywhere to go, but they wanted to spend. It was this pent-up demand situation. But now that things are normalizing and inflation is 8+%, you have to expect that the consumer is going to pull back somewhat here. Certain categories will perform better, but this is a reset of the consumer back to normal here.
Well, and, over the weekend, Lloyd Blankfein was telling Margaret Brennan he thinks it's time for consumers to get ready, to prepare for a recession. He said there's a very, very high possibility of a recession. Won't that be kind of a self-fulfilling prophecy? If consumers get ready for a recession, do we then automatically have one?
Well, and I think the consumer, it's very valid. The consumer's been hit with headlines that is increasing the fear factor here. But again, the consumer is out there in the stores. They're trying to buy groceries, which are 13-14% more expensive right now than they were this time last year. That's a massive pressure for the middle to low end consumer. And they're going to be looking for incremental value, the trade down, whether that's a Walmart or a TJX. So I think those are going to outperform. And also they're going to be looking for private label, really strong private label offering.
By the way, does Costco, I've always wondered, do Costco and BJ's and these, warehouse club membership shopping places, are those also places where consumers can trade down to, or are they, more expensive because you have to pay to join?
No, they absolutely, once you join, are less expensive. And even if you look at a basket, the year-over-year increase for a Costco versus a grocery store, it's about half of the increase year over year. So there's absolutely value, and that is why Costco is doing so incredibly well in this environment.
Stacey, we've been talking about retail for a few minutes. We haven't mentioned Amazon. I wonder how retailers are doing in competing, in particular with the marketplace side of the Amazon business. I know that's something that you've thought about when it comes to Walmart. Is that an area of focus for you as we get these earnings stories?
Absolutely. And let's face it, who isn't becoming a marketplace, from Macy's to Walmart? So certainly Walmart has a very strong offering and is in the very early stages of its marketplace, about 80,000 sellers at this point. And of course, they have their Walmart Plus subscription model. So online, they are becoming an increasing force to deal with for Amazon and absolutely gaining share there. So, stay tuned on that. But life is getting more difficult for Amazon, certainly not easier.
Stacey, thank you very much. Stacey Widlitz, SW Retail Advisors President. Thank you for joining us to talk about some of the retail data we're going to get out from the corporate side and also the macro side. Now, coming up later today, Bloomberg is live with the Greater Boston Chamber of Commerce annual meeting. We'll be hearing from guests, including Natasha Lamb of Arjuna Capital and DraftKings CEO Jason Robbins. That all starts today at 2 p.m. in New York, 7 p.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kailey Leinz in New York and Anna Edwards out in London. Now, Tom Keene, co-anchor of Bloomberg Surveillance, joins us now to talk about what's on his mind, what's on his show, what's his single best chart of the day. Tom, what have you got?
Mid-year outlook's coming up. A lot of adjustment going on. George Saravelis this morning with the research note of the morning recalibrates euro and just flat out says there's not going to be a recession in Europe. The chart is simple. It is the trend from February 24th and the war in Ukraine. It's weak euro. Euro's a bit distracted. Lagarde speaking today. I believe that is scheduled. Down goes the euro, and the extrapolation to parity gets you out into July, let's say. Saravelis with others goes the other way and looks for strong euro, resilient euro, coming back to still modest 110.
All right, so Tom, that's around the odds of a European recession. Something tells me you'll be talking about the odds of a U.S. recession with a certain gentleman from Goldman Sachs later on.
Jan Hatzius will be here, not with a clear recession call, but certainly a tepid 2003, a sub 2% growth. My key focus there, Kailey, is not the domestic economy, but how exports and imports figure into the GDP calculus.
All right, really looking forward to that conversation, Tom. Tom Keene, co-anchor of Bloomberg Surveillance, thank you so much. Now, of course, something else they may talk about with Jan Hatzius is the strength of the U.S. consumer. We're going to get some insight into that today with both retail sales data coming at 8:30 a.m. New York time, as well as earnings from the likes of Walmart and Home Depot. Really, what's going to be the focus here, guys, is how much higher prices have hit discretionary spending. Are these companies like Walmart and Home Depot still able to exercise pricing power, pass on the higher input costs they are facing, or is the consumer growing less tolerant of that? On the retail sales number, expected to be up 1%, Xing out auto and gas, though, up just 0.7%, while margins will be what to watch for Home Depot after a really bad print in the prior period, Matt.
All right, well, I think those are going to be absolutely fascinating releases to watch for sure, so I'll be paying attention to how the U.S. consumer is doing. If you were invested in any kind of stable coin, especially one that was algorithmic backed, or some DeFi schemes that count on those stable coins, maybe it's not a great time to be spending money at Walmart and Home Depot because
or anywhere.
We watched an epic failure of Terra USD, of Luna, of Do Kwon, who had been acting with so much chutzpah. It was amazing to watch the meltdown. Almost had a little bit of pleasure in that, but it'll be interesting to see how this affects the rest of crypto. It doesn't look like it's spread too much, and maybe the problem is the drop in BitDog, as Tom Keene says, kind of brought it on. But we'll be talking about that on our program today. Kailey and I always anchor Bloomberg Crypto on Tuesdays at 1 p.m. Definitely tune in. And we're going to talk with one of the founders of Ethereum, because they're preparing to switch from proof of work to what many people say is far less secure and less decentralized, proof of stake. Right now, he's working with Consensus, which is a different firm, but it will be great to talk to Joseph Lubin today about that switch for Ether.
You know, you guys have just really improved my Tuesdays. Tuesdays, as Matt knows, used to be my least favorite day of the week. But since the crypto show, now there's, there's something to look ahead to. Let me tell you what I'm focused on today, and that is all to do with UK politics, European politics, the battle around the Northern Ireland Protocol between the UK and the EU. The Foreign Secretary here in the UK, Liz Truss, is going to make a statement to Parliament in around 1.5 hours' time, we understand, about how the UK would break the Brexit deal if there's no results from the talks that have been taking place. This would be unilateral action by the UK, which would be perhaps get a dim reception in the EU and also in parts of the United States. But it will be interesting to watch how the UK would plan to do that. Boris Johnson has said he doesn't want to take this action, but he would rather negotiate. So we'll see how this shapes things in the months ahead. That is it for the early edition. Surveillance is ahead. This is Bloomberg.